All right. Hey guys, welcome back. I hope you guys had a great day today. It was pretty insane this morning. Pretty insane. Had some big movers. A couple of them were on our watch list, so if you caught one, I think you did really, really good. All right, so this is the very first class. We've gone through the roadmap to success. This is the first major stop on that roadmap because you should have all the foundation that you're going to need in order to take your trading to the next level. Okay, you guys should be seeing some consistency. You should be understanding the issues that you may be facing in your trading. We talked about how you could do it. If you guys skip the last 3 roadmap to success meetings, you really need to go back and check it out, because unless you get that stuff squared away, you're never going to get out of your own way. So before we get into it, we'll recap today, because today is pretty much how I like to trade. This is, I guess you can call this the average Joe trading way. I like to lock in on one stock and ride it all day. Some days I get pissed off at the stock at first, and I tend to forget about staying locked in, and I start chasing other stocks. And you'll see some of those days where I have traded 4 and 5 different tickers, and I have like 25 tickets on all these different stocks. But I really like locking in on one stock and trading it all day. Now, it did give me a little bit of a headache. And we do have 20 tickets on this, but you got to understand, we're taking profit and I'm scaling out. And I'm just from that school where I'm going to take profit at predetermined targets, maybe levels of support or resistance, maybe psychological levels, or levels that I believe to be psychological levels. But that's the way I do it. I'm more, I do like the quick or semi-quick trade in the morning. And that's the opening range breakout or breakdowns. And then later on in the day, I like it slow and easy. And that's pretty much what we do. So this morning, this was the 5-minute opening range breakout. Here's the opening range high here. Now, I could have actually caught it here, but this wick is not longer than the body, so I have to go with the wick. Plus, I waited until we were over VWAP good, so we got in on the 5-minute opening range breakout. And the thing about this, and why this is the first strategy that we cover, this is the easiest strategy. It's a no-brainer. The entry is already figured out for you. You don't have to think. You're going to look at support and resistance around it. And sometimes when you get really comfortable with it, you'll start to try to figure out how to enter early. But as a beginner strategy, you can't really beat this, because it's like, if it breaks the high, you get in, you go long. If it breaks the low, you go short. If that next candle closes above the low and you short, you take it off. Technically, the trade's dead. You could stay locked in and wait for it to set up again, or you can just walk away from it. But it's really, really simple, really straightforward. So we get in. First profit target was right up here around 153. Actually, it was going to be 153.50. And sorry. Let me turn Benzinga off here. Benzinga Charlie's still kicking. So it pushed up so much that by the time I hit the button, I was good 20 some cents. So we covered at 153.74. The next target was 155, and you got, by then I had put out the limit order for 155. It got hit, and then we pulled back in to break even. Now, sometimes it may be good to, when it starts to pull back, to go ahead and kill it and try to get back in again. But you never know. You never know if this was going to flag out and run up, and I could add to it if I wanted to. Wouldn't have to get all the way out the position, and I would have a better average. But ended up having to take it off here. And then here's where the headache started. Looking for the bounce. Here's a big indecision candle. And I typically go with the next candle. If we have a big indecision candle and the next candle opens and we break the body, I'm going to go long. I'm thinking that it is a long. If it goes the other way, then it'll be a short. But we were wide open up here. Here's the 52-week low. We're wide open up here. So it's a long all day long. And this is the trend continuation. All this is the secondary trade to the opening range. And all we're doing is, once the opening range trade is done, I'm waiting for it to pull back or bounce if I'm short and give me another setup where I could get in off support. I can manage my risk and, feel pretty good about it. So here, did not work. We just could not push. So I ended up taking it off. This came all the way back to the 20. You can see how we are pushing up here. And so once we got over all of the moving averages, VWAP, and we broke the high of this candle, that was my trigger to enter. But never could make my target. It never could push up to make my target. Honestly, this kind of threw me off. I did not think we were going to come back this hard, but I waited a tick because a lot of times we get this huge sell-off that takes out stops and shakes out the week, and then we start to push up. And when this failed to push through and we started to come down, as soon as we broke the low, I flipped it short. I felt that we were about to sell off hard, and I felt we were coming back to the 52-week high. And did get the first target almost immediately, and then it bounced, took me back out at break even, but I'm still going to be locked in. We rejected up here. Again, once we broke the low, I jumped in again, and it started hitting my target. First target was 52-week low. Next target was this 148 daily level. And the next target, I tried to get 145.50, but we couldn't get it. So we took it, where was that? 145. That was, let's see. Was that it? 146.20? I think that was the one. But didn't quite hit that. So I'm happy with it. I mean, that's a solid trade here. And then as we came back up, I kind of left this little piece on too long. I probably should have taken it off over here, but I just left it on. It was only, a few shares, so I left it on, and it got stopped out at break even. and then it came back. I was able to get back in, and we did get a little pushback, but it rejected, and we finished up the trade. So really, this surprised me. I had no idea we were going to drop down to 143. I really thought the 200 was going to be it. That was my final target. But that was the day. We locked in on one stop. We were patient, even though we got stopped out a couple of times. You know, and I did give this a little bit more room than I should have. This one, because I honestly thought we were coming back, and I didn't think we were going to get this huge sell-off. This pretty much messed up my risk on this, but you know, we survived it. So that was a pretty good one. This is typical. This is what I like to do. It's really simple. It's consistent. Yet sometimes the opening range doesn't work, but then the trend continuation does. And it balances itself out. You don't make money on one, you're going to make money on the other. Sometimes they both work together, and you see those $700-800 days. When one doesn't work and the other works, $250 to $500 days, depending on the move. But they're consistent, and it'll allow you to grow your account. They're perfect for small accounts. Perfect strategy for small accounts. And obviously, the less money you have, the smaller gains you make. But over a period of time, and not that long of a time, these small gains grow. So you guys saw, beginning of the year, I started with $5,000. Every month, we wire out. I wired out at the beginning, Friday. So started with just over $5,000 this month. Every month, we start over with $5,000. And you could go back and check and see just how much profit we're making with that little bit of money. And it shouldn't take long to grow your account to where you can start, looking for a traditional broker. That's the end game. That's the whole point of this, is to grow your account to where you can get in a traditional broker. And by then, you will have developed the skill set needed to, really make a difference in your trading. Would you only short after it's lost the 20 EMA? Yeah, I would not short. Well, now I will short into it if we're showing considerable weakness. I will do it. But it has to be showing considerable weakness. Uh-oh. I'm listening to myself here. I'm listening to myself. I need to cut it off. But I think one time I did short, like right here. We broke down and we fell through this and we rejected the 20, the 9, and the VWAP. I'll short into the 50 that way. Because even if we rejected here, I still would have made a couple bucks. Or if it bounced and rejected here again, it's going to fall through it. So there are times where I would short into a level of support or moving average, but it's not common. Look at it. It could look at the trend here. Where is it trending? It's unmistakable. Whenever you can't make that next high, where is it trending? It's trending down. This was a lower high. This was a lower high. And then once we broke through this, and we could not push back through, game on. It's a combination of things. You have to look at the trend. You have to look at the fact that it's making lower highs. It cannot push through the highs. And it can't really get any momentum going to the upside. Then once it falls through support and it can't push back through it, it's game on. That's weakness 101. And it's really simple if you stand back and take a look at it. What happens to us is we get tunnel vision and we just start looking at these like a small group of candles. A small group of candles. And if we look at that small group of candles, if you look at this small group, it looks like it's trending up. You look like it's a long. But take a step back. Look at what's happened here. And that's going to tell you you're trending. You're trending down. Unless something breaks it. Unless you get a bounce and it takes out the high. That's it. That's what you're looking for. And it doesn't take long to spot these. It's just a matter of not getting caught up in tunnel vision in that trade. Being able to step back, look at the overall trend. You remember how sometimes when I get caught or my stop gets blown up? That's what I do. I stop, I take a step back, and I look at the overall picture and say, oh, look, it's actually still trending in my direction if you look at the overall picture. So, there's a chance that this is going to go my way. But once that trend breaks, don't sit there and hold it against the trend. Once it breaks, that's it. And I try to talk about that every day. I try to talk about the trend. I try to talk about everything that's related to what we're doing in the trade. And we're going to go over all of that, throughout the next several weeks in the day trading class. Do you think you'll be taking what? I trade 1,000 shares, 2,000 shares, but not in my small account. In a small account, I'm only dealing with X amount of dollars, and I'm not going to trade 1,000 shares in it. Because I don't trade penny stocks. I don't trade stocks under $20 for the most part. So, but in my swing account, my fully funded accounts, yeah, I'll trade 1,000 shares. Now, I won't trade 5,000 shares. You don't have to worry about me ever doing that. But 1,000, I'll do it. All right, so the day trading, the average Joe Way class, these are the things that we're going to cover. The first part is the foundation. Now, we got a lot of that foundation in Roadmap to Success. We're not going to repeat a lot of that stuff. If you haven't gotten it, you want to go back and get it. You may need to go back and rewatch it. I'll refer to it and tell you when we get to an area, say, hey, you may want to go back and look at this. The truth about day trading, I'm always going to say that is something that I have to reiterate over and over and over again. The process, the trading business plan, which you guys already should have in place. I'm just going to mention that briefly. Scanning, charting, technical analysis, and working in the sim. I've been working with these guys trying to get a simulator that you could use aftermarket and at night, similar to on demand. This isn't something that runs live during the day. Something you can use at night. And hopefully that's going to be close. But we're going to talk about how to use the simulator. I never traded in the simulator when I started, other than on demand at night. That's how I practiced, because I had a full-time job, and that's what I had to do. We're going to talk about the strategies. We're going to break down each one. The opening range trades and the trend continuation. The two that I use today, those are the two that I use practically every day. So we'll be using that. The reversals, every blue moon I'll trade a reversal. I don't have to anymore, because as long as the opening range and the trend continuation is running, then I don't really need reversals. But we'll talk about some pre-market trading. We'll talk about ETFs and IPOs. These are things that you don't want to get mixed up in until you actually learn how to trade. So that's why, that stuff is going to be, later on down the road. And then, we dabble in this as we go. But in the end, we'll do a full-blown trading psychology that covers a couple of classes. And it kind of builds on what we've already done about identifying ourselves, working with our emotions, dealing with the confidence issue that we work with all the time, and then becoming that calm, cool, collected trader. That's going to be key. So, if you don't know the truth yet, I'm about to tell you the truth. But you want to ask yourself these questions, because how you answer them is going to determine whether you want to continue or not. Would you start a business if you had no idea what the cash flow was going to be? Would you start a business if you had little actual experience or training compared to your competition? But would you go into a business where your competition was well capitalized and you had limited capital? Would you start a business without a business plan? You would probably answer no to all of these questions. But if you think about it, number one, we have no idea what our cash flow is going to be from day to day. We can set all the goals we want, but we have no idea what the market's going to give us that day. We are coming into an industry where, if you were like me, you had no actual experience day trading. Now, I messed around swing trading a little bit. I opened up my Ameritrade account in 1999 and sat there on my little computer when this thing started, this whole revolution started, and I didn't know what the hell I was doing. Had no clue. The only thing I remember was what I learned in school, and that was it. That's nothing. So you got to think about it. That's what we're doing. Would you go into a business where your competition was well capitalized and you have limited capital? It's exactly what we're doing. Exactly what we're doing. I don't think anybody here or anybody listening to me has $1 million in their trading account. I'm pretty sure of that. So we are underfunded. And even if you have 100, even in my swing account, I could swing freely, but I still feel underfunded compared to the banks and the mutual funds and all that stuff. So we're just going to be that way. And I have established that you guys need a business plan. So we have established that 100%. So you got to realize we're going up against the best traders in the world. Training, experience, psychological control, and a realization that you're not invincible or smarter than the market. That's going to lead you to success. Wall Street is built on the souls of all those who didn't learn this lesson until it was too late. And the last time I walked on Wall Street, I felt them. I felt the pain. I felt the stress. So it's there. It's not a myth. I can promise you that. All right, so truth number 1. We got 5 truths that we're going to go through real quick. That your trading success is not going to happen when you want it to. And you must understand that it is a process. It's going to take time to get you to where you need to be. Trying to find a shortcut or the holy grail is going to lead you to a blown account. And I liken it to somebody building a house without taking the time to build a foundation properly. You look at this house on the left. This is what happens when a house is built without the proper foundation. If you look at this building on the right, it's been washed out. All of the dirt, everything has been washed out up under this house. But look, the foundation was built deep enough. They took enough time to build a foundation that everything got washed out from up under it, but it's still standing. It's not cracked. It's not crooked. It's not doing anything. So our trading is the same way. If we try to shortcut things and we don't build that foundation, we're going to come crumbling down. If we have that foundation, the market can sweep stuff right out from up under us, but we're still standing because we know exactly what we need to do to get back to where we need to be. So make sure you understand it's trading success is not going to happen when you want it to. It's a process and it will take time. 80% of trading success, I think, is 90%. But the general accepted percent is 80. 80% of trading success is psychological. 20% is strategy. If you do not have your mindset in check, you can have the best strategy in the world, but you'll never be able to execute it. Never. And if you have looked through the psychology course already, you'll see, I talked about this. Everything's connected to us. We're not a cornerstone, we're the nucleus. And if we're not right, if the nucleus is screwed up, what happens? What happens when the nucleus gets screwed up in an atom? Don't have to tell you. All right, so most all self-proclaimed day traders lack the right education. You all have these bits and pieces of knowledge that you got from this person, that person, this person. I know because I was like that when I started. I went everywhere and got a little bit here, a little bit there. Watch this video, watch that video. But I didn't know what success looks like. I did not know what a professional trader looked like trading. Had no idea. And nobody was doing it. I would be in rooms and people would type in, they're doing this, they're doing that, or they would say it. I couldn't see it. I didn't know what was happening. I didn't know how to apply what I was learning to what was actually happening in the market. So that created a lot of stress for me. But it's just like a jigsaw puzzle. If I take it out of the box and just throw it on the ground and you never see what the finished product looks like, how hard is it to put it together? How hard is it to put that puzzle together? Can you do it? Yeah. It's going to take a long time and you're going to be putting pieces together that don't fit. and get frustrated. And a lot of people quit before they even do it. But just like anything else, there is a process to doing this. It's a long drawn out process. So you really need to see what success looks like, what the finished product looks like every day, so you know what you're working towards. And if you don't like it, then stop building it. But this way you have a good way of understanding what's going on. All right, you got to treat your trading like a small business. You got to have that mindset. Establish a business plan, establish a budget, and stick to it. If you treat it like whatever, and let's say by chance you make a ton of money and you just play with it and you think it's just money you can play with and do whatever, let me tell you, Uncle Sam's going to come knocking. I learned that the hard way. So you better treat it like a business. You better make sure you keep up with it and you do your taxes. Because if not, it's not going to end pretty. I promise you that. And last but not least, this is the most important of all. You must be ready to take full responsibility for whatever happens in your trading. If your internet goes out and you're stuck in a trade and you lose your money, don't blame your internet. Don't go around fussing. Accept responsibility. Because guess what? When you took that trade, you accepted responsibility that whatever happens, you got to accept it. It's on you. Because you got to pay for it. So anything that happens, any mistakes you make, any mistakes other people make, you have to accept responsibility for it. And I can't put it any other way. But these 5 truths you have to accept before you move forward. It is imperative that you accept these before you move forward and start learning how to trade. If you don't accept them, you don't believe in it, I'd advise you to stop and find something else to do. They're just that serious. All right, so I go by the process approach. At day trading, the average Joe way is all about process. Now, as a professional educator and engineer, I firmly believe in the process approach. Okay, I believe that's a big secret to my success as to why I'm able to stay focused on what we're doing and every day. So just think of an everyday task that you do. It provides a sense of order to your day. What you do, if let's say you have a habit of going somewhere to eat or get a cup of coffee or something that simple. Let's say you have that and all of a sudden that place shuts down or the road closes and you can't get to it. How frustrating is that going to be, and how is that going to just throw your day out of sorts? Especially if you don't have a plan to deal with it. So a process it helps give you a sense of order, but it also helps you adjust if something goes out of whack, because you'll know what to do. It describes how a day trade is going to be put together as far as we're concerned. It provides the focus for executing and managing our trades. So after the trade, it provides a tool for reflecting and determine if there's something that we missed or something that we can improve on for the next time. And there's always something. So the first thing you have to do is really develop and accept that perspective of what matters in our trading. What matters in your trading. Because what doesn't, you need to throw it away. The last thing you need to do is bring a whole lot of baggage and garbage that you don't need because you're a pack rat and you don't want to throw it away, or you paid a couple $1,000s to learn this or a couple $1,000s to learn that. Well, the first question I'm going to ask you is, how much money has it made you to this point? And how much money has it lost you? And then you're going to probably decide to leave it where it goes. Leave it in the trash. So you have to understand what matters. And then you can start to build your trading process based on the things that you actually need and can actually use. So here's my simple day trading process. We scan, we plan, we execute, and we finish. Okay. We're going to try to get to the scanning part today. If not, that'll be the first thing we pick up on next week. But when we scan, we're looking for the pattern and the story. We're looking for stocks that are in play. We find the entry, that's part of the planning phase. We take the position, we're executing. While we're in the trade, we're executing. And at the end, we reflect and we analyze. It's a simple 4-step process, but each step, they have some subsets that we're going to cover. And that's going to be the basis for how we look at each one of our strategies. So my trading process looks like this. Now, I don't have the morning routine on the previous slide, but my morning routine is just as important. It changes up depending on whether my son is in school, we're in the middle of the school year, or whether we're in the summer. So that morning routine is going to change in terms of the time I do what and what I do. So, but I do my morning routine. I develop my watch list. We do it right here together, 8:30 every morning. Some mornings, if it's really slow, I'll wait until like 8:45 or whatever. But that watch list is going to be built. Then I'm going to start looking at these stocks and try to build a virtual trading plan. You can't do it. You can't build a solid trading plan yet because the market's not open. And we all see sometimes the last 15 minutes going into the open, a stock will pop or it will sell off. And if we had any hard plans, it's going to throw it out the window. And that brings on a sense of frustration. And then you're starting the day frustrated. And we all know how the day ends after that. So we can't do that. But we want to execute according to our plan. And guys, the strategies are simple. They're real easy to learn. The hard part is executing. That's why the focus is on executing. And part of the execution is the mental game. A big part of the execution is the mental game. So that's where our big focus is. And you're going to go, at the end, I'm going to reflect. Just like what I did at the beginning of this class, I reflected on my trade. That's pretty much what I do. And if I see something that I did wrong, right then and there, I could say, oh man, I know exactly where I messed up. And there it is right there. Put it in writing. When you put it in writing, it burns into your memory. So what you guys want to do this week, go to the member videos and watch the first starting and growing your small account, the foundation. That's going to give you some good background information on my process. It goes into it a little bit deeper. All right. So again, I do the same thing every morning. My watch list. You see my watch list, where it comes from. Same thing. I don't look anywhere else. I don't look on Twitter. I don't look on stock tweets. I don't look on Instagram or Facebook. you guys will say, hey, look at this stock. What about this stock? I'll look at it for you, but I'm not going to put it on my watch, because if it doesn't hit my scan, or it's not on any of my scans, it's not going to meet the parameters for me to trade it. So I'm not going to look anywhere. That's how you stay consistent and not jumping from here to here to here. I had somebody that is in like 2 or 3 rooms, and he said, hey, Mike is looking at this stock. What about this? Well, you ask Mike, because I'm not looking at it. I'll tell you about every stock that I'm watching and why I'm watching it, but I'm not going around looking at other people. That's how you have to stay consistent. I'll vet each stock the same way, using the checklist that I have to determine if it's actually tradable for me. Mitch, when we get into the scanning part, you will see exactly what it is. It's what I talk through in chat every day, every morning. It's the process that I go through and how I'm looking at everything. All right, so we get into the last 30 minutes. Prior to the open, I'm watching the tickers on my watch list. You guys know I'm looking at virtual trade plans. So close to when the bell rings, that's when I'm going to have him kind of jot it down. And I still have to jot things down, because I got so much going on. And if I don't write it down, I'll forget it and I'll miss the trade. And that happens. So I'm not looking at, I'm only looking at 1 or 2 stocks. I would have narrowed it down by then. You'll see the stock on you'll see the stock on my live feed. You'll see the chart of what I'm looking at. That's usually going to be my number 1 watch. And I'm going to know what's my plan if it sets up to the long side. I'm already going to know what I'm going to do. If it's going to go to the short, I already know what I'm going to do. I already know the setup I want to see. At the open, I'm trading the opening range breakout or breakdown. I already know where my potential profit targets are going to be. I already know where my potential stop's going to be. Because we have to know, is the profit window large enough for the trade to make sense? If our profit window is 50 cents and we're giving it $1 stop, we'll never get out of our own way. So these are the things that we're going to be going over step by step in the class, so you understand and you know exactly what I'm looking at. And when I say what I say, you'll understand it without question. So I've got a video in the member videos called Time to Plan. You can go look at that. That's going to help give you some background information as we move forward in this class. Because like I said, we're going to dig deep into the strategy and the examples, because there's no 2 trades are alike. They can set up the same, but they're not alike. They're always going to be different, and you're going to have to do different things. So we're going to be talking about all of that. But check that video out. And all of these videos you can watch again over the weekend. And they're on the member video section. So once the stock triggers, I'm going to jump in. All right. Done. No questions. If I'm still questioning whether I should take the trade, then I don't need to take it. And y'all need to talk me out. If I'm sitting here, should I take this trade or should I not? I should not take the trade, because when I take it, there should be no doubts in my mind. It's set up, I'm taking it. And that's that. It's either going to hit my stop or it's going to hit my profit targets. Once that's done, let's move on and wait for this thing to give us our second opportunity. So again, I have my profit targets written out so that I know exactly what I'm looking for. The technical level that I'm basing my stop on. So all I'm focusing on are the marks. The marks on my chart, which are the targets. There's some people that say knowing when to exit is the hardest part of the trade, but if you have a plan ahead of time already, and all you do is just watch the chart, watch the plan, saying, okay, I'm gonna stop here. This will tell if it gets here, then this trade's not gonna work, or it's gonna hit my profit targets and I need to take profit here. Whether you're taking it all off or whether you're scaling out, it doesn't matter. All you want to do is wait for it to hit one of those targets. Don't look at your P&L, because that will cause you to take trades too early. You'll kill them too early, and you won't let it work because you're watching how much money you're making. And in a trade, you're gonna be red, green, red, green, red, green. However many of you guys that were trading COUP with me today, I'd be down, and then I'd be up. I'd be like down a point, then I'd be up a point, down a point, up a point, and then next thing you know, I'm up 3 points. Okay, that's the thing. All right, so it'll also help you manage your emotions while you're in a trade, and that's key, guys. That is key. All right, so once the trade is done, I'm going to reflect. When I do my recap every day, that's my reflection. I record it. I put it out there on YouTube. I didn't do it yesterday because I completely screwed up and everything is such a mess. It's going to take a minute. I got it figured out. So, I may do that tomorrow. But I got accounts mixed up, and I was trying to practice with my hot buttons to make sure that they're good. And it was just a mess, but I got it all squared away now. But I believe one of the key things to help you get better faster is reflection. Looking at your trade, looking at what you did right, looking at what you did wrong, and analyzing the trade after it happened. Now, you can grade yourself based on how well you stuck to your trade plan, because that's what we have 100% control over. And we're going to focus on that too in this class. You have 100% control over executing your trade strategy. We don't have any control over what happens in the market, but we have 100% control over what happens over executing our trade plan, whether we take it off or not, or we stick to our plan. So it's very important that we do this reflection, not only grade ourselves for our execution, but look at what the market did. And if it's doing the same thing over and over and over again, then you've got your reflection notes to tell you so you can make an adjustment. And so again, I've got a video on journaling and reflection that you can take a look at. It's in the member video section. So if you haven't seen that, then you want to go back and take a look at that this weekend. So you got a lot of homework this weekend. All right, so I'm going to try to touch on scanning real quick, and then next week we're going to dig into it. But because you guys see this every week, every day in chat, we do this every day. So whenever you have questions about it, always ask. 100%, always ask. I use trade ideas. I use FinViz to look for the catalyst in the news, and I use Thinkorswim for my charting. I grew up using Thinkorswim. It's easy. When I mark levels, they don't disappear the next day. There's just a lot of little things that I love about Thinkorswim. And I'm only using like 5% of everything that Thinkorswim does. And I don't even need that. So, needless to say, I love Thinkorswim. So, the reason why you want to have a scanner, and there are free scanners out there, I believe, but I don't think any really can do the job that Trade Ideas does. And I know, and I don't blame people for asking and wanting to know, where to find a free scanner. I don't want to spend $99 a month. It may be more now, but I don't want to spend $99 a month if I don't have to. But you have to understand, scanning, having a good scanner is part of the cost of doing business. So when you do your business plan, you're going to understand these things. Having the right platform, the right trading platform, having the right scanner, all of these are costs of doing business. It's like if you're going to run a restaurant and you don't want to invest in the stuff in the kitchen, you just buy a bunch of cheap microwaves and you want to microwave food, that's not going to work. And that's kind of what you'll be doing is if you don't have the right tools. So you don't have to have this elaborate computer, a $3,000, $4,000 computer. My computer costs $1,800, and it runs 6 monitors, does the streaming, recording, everything. And before I started doing the community, I didn't have to do that. I had a $500-$600 computer that did everything. So you want to focus on the things that are really, really important. And having the right tools, that's going to be important. Having the right scanner is important. Because typically, you have a market of over 7,000 stocks. Let me see. Matter of fact, let me bring this up right now so I can show you. It's moving a little bit slow. Let's see if we can get this to the home. So 7,728 stocks are available to trade. Not all of them are tradable. Because look at this one. This one has only 42 shares traded today. And it moves 6%. A $9 stock moves 6%. That's a pretty significant move. Only 42 shares traded. You can't trade that. It's not in play. So you got to have a scanner to come down and bring to you those handful of stocks that are in play. And you guys see every morning I have that, what I call an ORB pre-market scan. And I can't live without it. That helps bring me those stocks that meet my criteria and that are potentially in play for me. Now I still have to go through my vetting process. That's what we're doing those between 8:30 and 9. We're vetting these stocks. We're doing the technical analysis and all of that. And we're going to be going through that step by step throughout this course. So you'll be able to move right along with me. But again, stock scanners are required for successful day trading. All right. And then one of the great features of Trade Ideas, you could go back and do look at historical data. Let's say, this is what I used to do when I was on the weekends. I would go back on Monday, run my scan for Monday, pull the stocks, and then watch each of them on my on demand. And I was able to trade Monday on Saturday. I was able to trade Tuesday on Saturday. So that's one of the good benefits. So any stock scanner you get, you probably want to have something with the historical feature, because that's going to help you as you practice. All right, so here's my ORB pre-market scan. These are the stocks that you see me looking at every day. It's gonna give me stocks with volume over 50,000 shares traded for pre-market. If it doesn't have 50,000 shares, it's not gonna hit my scan. Don't ask me about it, because it's not tradable for me, and that's a filter that I have. So it filters through, and it only gives me stocks that are over 50,000 shares pre-market. I'm looking for a gap up or down of at least $1. I'm not looking for percentage. And I know that lower price stocks can have a big move, but it not be $1. I don't care about lower price stocks. I'm only trading mid to large cap stocks that can move multiple points. That's what I'm looking for. Because with smaller size, I'm exposing myself less in the market, and I'm have the ability to make just as much or more money if I'm exposing myself and taking incredible risk trading these penny stocks with low floats. So I just stay away from those. So the other filter I have, price less than $150. If it's over $150, I will trade it, but it will more than likely be on my earnings scanner, which we're going to look at that here in a second. But for my ORB pre-market scan, this is the number one scan. This is what I look at first. And if I get a good watch list here, I'm not looking anywhere else. But I'm looking for stocks that have a float less than 500 million. This is a filter too. I didn't type filter on it, but this is a filter too. Float less than 500 million. I will trade higher float stocks if they're on earnings. I will trade them, but if I have a full watch list with stocks under 500 million, then that's what I'm going to go with. I'm looking for the ATR to be over $1. I don't filter these out, but this will put them, if I'm looking at two stocks, if one has a higher ATR, I'm probably going to pick it because I feel it has the best opportunity to move throughout the day, to give me moves throughout the day. And then I'm looking for a good daily chart. And all of these things we will look at every day. Oh, come on. Trying to end it. All right, so here's my ORB pre-market scan. So I'm going to try if it talks to me. But here's the scan. And what it's doing, I'm able to see what the price is. I'm able to see the volume. I'm able to see what the gap is. I do have the percent here, but I don't really care about the percent. I'm just looking at the dollar amount. This is telling me what the float is. Now, I do have lower float stocks that hit my scan because some lower float stocks do have a higher price. And I will trade those. But, it doesn't really matter as long as the price is right. Now, if I have a $2 stock and it has a 1 million share float, no, I'm not touching it. Leaving it alone. But this Yeah, it's not responding. But we'll go through this every morning, and tomorrow morning I'm gonna record the session tomorrow morning. We'll probably live stream tomorrow morning. It's Thursday, I think. So as we go through this, you'll see just how I use this scanner. Because some parts of the class are gonna spill over to the next trading day because we're gonna have to look at live trading in order for it to make sense. So we're going to look at this. I'm going to show you exactly how I use this. You already know what the filters are, and I'll show you exactly how to use it. Over here, this is the other scans I use in the morning. These are the ones that are usually reporting earnings that day. And the ones that are reporting in the mornings are the ones that usually have the volume. And so again, I'm only looking for stocks that have volume. So once I finish here, I'll go here, and this is where I'll find stocks that may be over $150 and have, maybe have a higher float. But they're all in play because they meet the criteria. All right, so does anybody have any questions about this? Now remember, we're gonna pick this class is gonna pick up tomorrow as we're actually doing scans for that day. And then like when we get to the planning part, then we'll be doing that live in the room as well. That's how this class is gonna work. Because me sitting here telling you and then giving you dead pictures and dead charts does absolutely no good. It just doesn't help. Unless you can see it, feel it, touch it, it's kind of hard for you to grasp it. Or you can grasp it, but it needs to really sink in. Yes, Thinkorswim news button is adequate. I mean, I use FinViz as well because typically it has multiple news sources all in one place. But Thinkorswim does too. And then obviously, we have free the free Benzinga Pro. So we have enough news. We have more news than we need. We got enough news to get us in trouble. Put it that way. And it sometimes does get us in trouble. All right. Any questions about what I covered today before we get into tomorrow morning? All right. Excellent. So I know some of you old school guys, you've heard this before. Some of you newer guys, I know this is new, and it may take a minute for you to grasp, but believe me, after tomorrow morning, you should have a good grasp on my scanning. And for those of you that have gone back and you've read my blog from when I started back in 2014, I started doing a blog when I first started trading. And then I kind of migrated into doing the videos. And you guys, through all of these years, not much has changed. my strategies have been tweaked a little bit, but it's all pretty much the same. Consistency, guys. Yeah, the market's going to change. You can adapt to the market without blowing yourself up, without doing wholesale changes. It's about staying consistent. So that's going to be the message, or one of the messages going forward in this class. All right, guys. So tomorrow morning, 8:30, I will. If you can't be here in the morning, I will have it recorded. And I'm going to try to put both links, but if I can't, I'll have both of them right next to each other, or overlap them, so you won't get lost looking for it. All right, guys. So that's going to wrap it up for today. I'll see you guys tomorrow in our pregame, starting at 8:30. Be there or be square.